Pantheon AI presents Big Tech losing control as Russia launches 600 drones. U.S. economy surges 3.3%. And a very good morning to you all. Welcome to the PAI Morning Briefing. It is August 28th, 2025, and I'm John, ready to dive into the markets.
I'm Sarah, and it's great to be with you. We've got a really interesting mix of news shaping the financial world today. So, John, why don't you kick us off with the numbers?
Absolutely. Let's take a look. Over in the U.S., the S&P 500 is sitting at 6,486.8. It's barely moved, up just a tiny 0.045%.
Just holding steady then. What about the Dow?
The Dow Jones is in a similar boat, closing at 45,570.8, but with a slight dip of about 0.02%, so pretty flat there as well.
Okay, so a bit of a mixed bag. The Nasdaq, though, finished up a little stronger at 21,648, which is a gain of around 0.134%. But then the Russell 2000 saw a small drop of about 0.3%, down to 2,375.
Right. So the big picture for stocks seems to be waiting. But you know where there isn't waiting? The crypto universe. Bitcoin is on a bit of a tear, trading around 112,768. That's up over 1.3%.
Wow, that's a significant jump for a single day. And Ethereum is following that trend?
It is, though not as dramatically. Ethereum is up about 0.176%, sitting near 4,514. So while the traditional markets are sort of holding their breath, crypto is showing some real bullish signs.
It really feels like a state of cautious optimism, doesn't it? Despite those little jitters in the Dow and the Russell. But these small day-to-day changes make you wonder, what's the real story driving the market right now?
That's the perfect question, Sarah. And the answer is pretty fascinating. The big narrative this morning is the surprisingly robust performance of the U.S. economy in the second quarter. The latest figures show it expanded by roughly 3.3%.
3.3%? That's really strong. What's behind that?
It's the consumer. Consumer spending has been the unsung hero here. Households spent about 1.6% more than expected, which is a big deal. It's got economists buzzing that we might be seeing a truly sustained recovery, even with those inflation worries still lingering.
That's fantastic news. But there's another twist, isn't there? I was reading that this market rally is happening even while big tech is, taking a bit of a backseat.
Exactly. It's like the market decided to throw a party, and for once, big tech didn't bring the main dish. We're seeing this rebalancing act where other sectors like industrials and energy are stepping up and providing the momentum.
That is so interesting. It really raises the million-dollar question. Is this just a temporary blip, or are we actually witnessing the start of a more diversified growth cycle? A cycle where we can find value in some really unexpected places?
Let's dig into that, because it connects to all the key stories lighting up the headlines. First, let's circle back to that economic report. That 3.3% expansion, driven by that 1.6% jump in consumer spending. It suggests consumers have both the confidence and the cash to keep the economy moving.
Right, and for our listeners who are investors, that's a clear signal to keep a close eye on consumer discretionary stocks and the retail sector. They're the ones likely to benefit most from these trends.
Good point. Now, on to that story about the stock market rally without big tech. This is what I find so intriguing. For the last decade, it felt like what the tech giants did, the market did. But now, in August, we're seeing these overlooked sectors grabbing the spotlight.
And there are clear reasons why, right? Energy is getting a boost from geopolitical uncertainty and rising commodity prices, and industrials are benefiting as supply chains get reconfigured.
Precisely. It makes you wonder, are we at a tipping point? Is the market fundamentally reevaluating its old winners and losers? And what does that mean for where capital is going to flow next?
And speaking of geopolitics, let's shift our gaze globally because there's some crucial and frankly concerning news coming out of Eastern Europe. The U.S. envoy on the Ukraine and Russia conflict, Mr. Kellogg, has issued a pretty stark warning.
He has. He's cautioning that recent Russian strikes are a serious threat to peace efforts. And the details are grim. Russia apparently launched one of its most aggressive attacks of the year overnight, using nearly 600 drones and 31 missiles.
And they targeted some very sensitive sites, including an EU mission and British Council offices in Kyiv. Thankfully, no casualties were reported among EU or UK staff, but the sheer scale of this has definitely spooked the markets.
You can see it in the reaction. Global risk aversion is up. Investors are looking for ways to hedge their bets and rethinking their exposure in politically volatile regions. It's a powerful reminder of how interconnected everything is.
Definitely. But let's bring it back to a more positive domestic story. On the labor front, jobless claims are retreating. First-time claims actually fell by about 5,000, down to 229,000.
That's a great sign. And when you see that paired with continuing claims also moderating, it sends a really reassuring message about the labor market's resilience. The underlying trend is strength.
And that feeds right back into the economic growth story we were just talking about. A strong job market bolsters consumer confidence, which leads to more spending, which drives the economy. It's a virtuous cycle.
So let's break down what this means at the sector level. In technology, it seems like the high valuations are finally catching up. It's almost as if the tech sector is proving that even giants need their beauty sleep. Some capital is definitely flowing elsewhere.
And that, elsewhere, is sectors like energy and finance. Energy, as we said, is benefiting from geopolitical tensions, while the finance sector is getting a lift from the recovering economy and the prospect of rising interest rates, which is great for banking profitability.
It's funny, it feels like the market is that one quiet kid in class who suddenly gets the spotlight when everyone else is taking a nap. While big tech is sipping its latte, energy and industrials are out there doing cartwheels to show off. It's a great reminder that even underdogs get their moment.
That's a perfect analogy. And thinking bigger, globally, those geopolitical tensions aren't just an Eastern European story. You can see the ripple effects everywhere. European bond yields are adjusting, and Asian markets are getting more cautious. It really underscores the need for regional diversification in a portfolio.
Absolutely. And experts are watching this all very closely. The consensus seems to be that we're in a period of recalibration. Many are suggesting a barbell strategy, investing in both safe, defensive blue-chip stocks on one end and opportunistic bets in these undervalued sectors on the other.
And what about crypto? The predictions there are all over the place, as usual.
Of course. The recent uptick in Bitcoin and Ethereum signals optimism, but experts are quick to warn about the inherent volatility and the looming shadow of potential regulation. It remains one of the most dynamic and unpredictable parts of the financial world.
So, as we wrap up, it seems the big theme is diversification and recalibration. The old playbook of just betting on big tech seems to be losing its luster, reminding everyone of the importance of a well-rounded approach.
It's like preparing a balanced meal, isn't it? You need a bit of everything to keep the system running smoothly. It's clear that flexibility and having diversified insights are absolutely essential right now.
All right, let's do a quick recap of the key takeaways for today. First, the U.S. economy is showing impressive strength, with a 3.3% expansion in Q2, all thanks to the powerful American consumer.
Second, the market rally is broadening. Big tech is taking a breather, allowing sectors like energy and industrials to step into the limelight. Third, geopolitical tensions in Eastern Europe are a major factor, increasing global risk and impacting markets worldwide.
And don't forget the resilient labor market, with falling jobless claims, which supports the whole economic picture. And finally, the crypto space continues to be a hotbed of activity, offering both opportunity and risk.
Which leaves us with some big questions to ponder. How should we, as investors, adjust our portfolios when the old market leaders start to fade? What emerging sectors might hold the hidden gems for the next bull market?
And in this kind of geopolitical landscape, how do we balance navigating short-term volatility with our long-term growth goals? These are the questions we should all be thinking about.
Couldn't have said it better. Thank you all for tuning into today's PAI Morning Briefing. We're here to help you decode these complex trends. Join us again tomorrow for another deep dive.
Have a fantastic day and happy investing, everyone. Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.